Okay, so, you know, we've been looking at a lot of listener feedback and articles, and it seems like everyone's talking about this big shift in the insurance world.
Yeah, a lot of buzz around it.
Right, and especially with London Insurance Week 2025 coming up. I mean, it's hard to avoid.
Yeah, no kidding. It's front and center, and for good reason, I think.
Exactly. So we're going to kind of do a deep dive into this whole, sustainability and ESG thing that everyone's talking about.
ESG, environmental, social governance. Yeah, it's the acronym of the moment, for sure.
It really is. And, it seems like it's not just about, insurance companies wanting to look green.
Right, it's deeper than that.
It's really about how they look at risk, like how ESG is changing their whole perspective.
Absolutely. It's a fundamental shift in how they're assessing and managing risk. And I think LIW 2025 is going to be fascinating to watch because it seems like everyone's ready to move beyond just talking about ESG and actually start implementing it for real.
Yeah. I mean, technology is going to be a huge part of that, right? It's like, how do you actually make these changes happen?
Yeah, that's the key question, I think.
Okay, so let's break this down a little bit.
Yeah.
I mean, the first thing that jumps out from all this material is that this ESG thing isn't just some kind of, passing fad.
It's a total rethink.
Right. It's like a major earthquake. One article even called it that.
Yeah, and I think what's driving this is that we're seeing the real-world impacts of climate change every day now. Wildfires, floods. These aren't just hypothetical scenarios anymore, and insurers are feeling it in their bottom line.
Yeah, I mean, you can't ignore the financial side of this, right? Like, these events are costing insurers a fortune.
Exactly. And that's why they're having to reassess risk in such a fundamental way. And it's not just about the environment either. There's this whole social aspect too.
Oh, yeah, for sure. There's this growing expectation from society that businesses in every sector need to be more ethical, more equitable.
Exactly. And insurers are no exception. I mean, people are demanding fairness in how their claims are handled, where their money is being invested, everything.
And it seems like regulators are really starting to crack down too.
Yeah. Yeah, we're seeing the shift from voluntary guidelines to mandatory requirements, things like the TCFD, the Task Force on Climate-Related Financial Disclosures, that's becoming a big deal. And then there's the newer ISSB, the International Sustainability Standards Board.
So basically, insurers are being forced to be more transparent about the ESG performance.
Exactly. They can't just sweep it under the rug anymore. And I think that's a good thing for everyone involved.
Okay, so one of the biggest challenges that keeps coming up is this idea of net zero underwriting. What exactly does that mean in practical terms?
Well, it's pretty ambitious. Basically, insurers are aiming to have their entire portfolio of businesses and projects that they insure aligned with a net zero carbon emissions pathway by 2050.
Wow, that's huge.
Yeah, I mean, think about the amount of data they need to make that happen.
Yeah.
They need to understand the carbon footprint of every single entity they insure.
That sounds like a nightmare.
It's a massive undertaking. They need super sophisticated modeling capabilities to really assess the climate risks associated with different industries and assets. And then there's the question of insurability itself.
What do you mean?
Well, some industries might become uninsurable as the world transitions to a lower carbon economy. So insurers have to make some tough decisions about who they're willing to back.
So it's not just about saying we're not insuring fossil fuel companies anymore.
Right. It's more nuanced than that. The key is to actively support the transition to net zero for these high emission sectors, maybe by developing new insurance products that incentivize greener practices or working with them to reduce their emissions over time.
Okay, so alongside this challenge of mitigating climate risk through underwriting, there's also this huge opportunity emerging in what they're calling climate adaptation finance.
Yeah, this is about recognizing that even if we drastically reduce emissions today, we're still going to experience the effects of climate change that are already locked in, so we need to adapt to that reality.
And what role do insurers play in that?
Well, they can invest in solutions that enhance resilience to climate, impacts things like financing infrastructure projects that can withstand extreme weather, supporting drought-resistant agriculture, community-level initiatives to prepare for flooding or heat waves, things like that.
So it's not just about charity, it's about making smart investments.
Exactly. It's about long-term risk management by investing in adaptation measures. Insurers can potentially reduce future claims and create whole new markets for insurance products that address these evolving needs.
Makes sense. Now, another thing that's getting a lot of attention is biodiversity risk. This feels like a relatively new concept in the context of insurance.
Yeah, but it's super important because it highlights how interconnected everything is in nature, the loss of biodiversity, things like ecosystem collapse, deforestation, water scarcity. These are all intimately linked to climate change, and they create huge risks for businesses and their supply chains.
Okay, so how does degrading nature translate into risks that insurers have to care about?
Well, think about it. If deforestation leads to more frequent flooding, that means more insurance claims. If water scarcity disrupts agricultural production, that can trigger business interruption claims for food companies. And the collapse of ecosystems can impact the value of assets, all kinds of things.
But how do you even begin to put a price tag on something like ecosystem health?
That's the challenge. The methodologies and data for assessing and pricing these biodiversity-related risks are still being developed. It's a big area for collaboration between insurers, scientists, policymakers. Everybody needs to work together on this.
Okay, moving on to the S in ESG, it seems like social impact metrics are becoming a much bigger deal for insurers.
Yeah, absolutely. The social aspect is getting a lot more scrutiny these days. Insurers are being held accountable for things like equitable access to their products and services.
And what does that look like in practice?
Well, for example, there's been a big push to move away from postcode discrimination, which is basically charging higher premiums based on where someone lives.
Right, that makes sense.
And there are other social factors, too, like ensuring fair and transparent claims processes, promoting diversity and inclusion within their workforce, upholding ethical standards in their supply chains. It's a broad spectrum.
But how do you quantify something like ethical supply chains? I mean, it's not like measuring carbon emissions.
That's a tricky part. Finding reliable metrics and ensuring transparency and comparability for these social impacts is an ongoing process. The industry is still figuring it out.
So we've talked about TCFD, and now there's this ISSB thing. These reporting frameworks seem really crucial for bringing some order to this whole ESG landscape.
Yeah, they're super important because they're pushing for standardization in how companies report on their ESG performance. TCFD laid the groundwork with climate-related disclosures, and now ISSB is building on that to create more comprehensive global standards for sustainability reporting across the board.
So this isn't just about checking boxes for regulators.
No, it's about providing strategic insights for the companies themselves by systematically assessing and reporting on ESG factors. Insurers can understand their risks and opportunities much better and communicate more transparently with investors, regulators, customers, everyone.
Right, and speaking of investors, insurers are huge investors themselves. So how does this whole sustainable investment thing play into this?
Well, they have a lot of capital to deploy, so aligning those investments with sustainable outcomes can make a big difference.
So what are they actually doing?
There are a few main approaches. One is ESG integration, basically considering ESG factors in every investment decision, not just as a separate thing. Then there's impact investing, specifically targeting investments that generate positive social and environmental impact alongside financial returns. And then there's engagement with portfolio companies, using their influence as shareholders to push for better sustainability practices.
So it sounds like technology is really the key to making all this ESG stuff happen in the insurance industry.
Absolutely. You can have all the ambitious goals you want, but without the right technology, you're not going to get very far.
So what are some of the specific ways technology is being used?
Well, AI and big data are huge. For example, insurers are using AI to develop much more sophisticated models for assessing climate risk. They can analyze tons of data to identify vulnerabilities and opportunities within their underwriting portfolios. AI can also automate ESG data collection and reporting and even help detect greenwashing.
Greenwashing. That's where companies try to make themselves look more sustainable than they actually are, right?
Exactly, and AI can help cut through that.
What about blockchain? I keep hearing about that.
Blockchain and DLT, distributed ledger technology, are really interesting because they can bring a lot more transparency and verification to the process, for example. You can use blockchain to track carbon credits, ensure the authenticity of sustainable supply chains, verify environmental certifications, things like that. It can also facilitate parametric insurance, where payouts are triggered automatically based on predefined environmental events, and create more secure platforms for sharing ESG data.
So it's about building trust.
Exactly. And then you have more physical technologies like IoT, Internet of Things, and sensors. These can provide real-time data on environmental conditions like air quality, water levels, structural integrity of assets, all kinds of stuff that feeds into risk models and can trigger early warnings for potential problems.
That's amazing. But it sounds like there's a ton of data involved. How do insurers manage all of that?
Well, that's where data exchange platforms and APIs, application programming interfaces, come in. These are basically the digital plumbing that allows insurers to connect with all sorts of external ESG data providers, rating agencies, climate data specialists, corporate disclosure platforms, and integrate all that information into their systems for underwriting, investment analysis, reporting, everything.
Okay, so London Insurance Week 2025. This is where a lot of this is going to come together, right?
Yeah, LAW 2025 is going to be a big deal. The focus is very much on this intersection of technology and sustainability. They're going to be talking about things like decentralized systems, ZKPs, zero-knowledge proofs, AI data exchange, all in the context of how to make ESG a reality.
They're also doing these living labs and executive deal rooms. What are those about?
So the living labs are basically demonstrations of real-world solutions. They'll be showing how these technologies can be used to address specific challenges like climate risk modeling or ESG data verification. The executive deal rooms are more about facilitating partnerships and collaborations between tech companies, insurers, investors, all focused on ESG opportunities.
So what kinds of things might we see at LIW 2025?
Well, maybe AI-powered tools that can analyze ESG risks in investment portfolios, blockchain platforms for green bonds, and I think there will be a lot of discussion about how to implement net zero underwriting in practice. That's a big one.
It really feels like the stakes are high for insurers right now.
They are. The industry's at a crossroads. If they don't embrace this ESG transformation and the technology that enables it, they risk becoming irrelevant, falling behind, losing customers, investors, everything.
So it's not just about doing the right thing, it's about survival.
Exactly. And the risks of inaction are just too big to ignore.
Wow, this has been a really fascinating deep dive into a super important topic. It's clear that the insurance industry is undergoing a massive transformation, and it's all driven by these ESG forces with technology playing a crucial role. And it's going to be really interesting to see how it all plays out at LIW 2025.
Agreed. It's a pivotal moment for the industry, and I think the decisions made in the next few years will have a huge impact on the future.
It makes you think about your own understanding of risk and responsibility.
Yeah.
You know, with all these connections between climate change, society, and the financial system, it's all intertwined. Thanks for joining us on the Deep Dive, folks.
Thanks for having me. It's been a great conversation.
Take care.
You too.